Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Colin Lake, CEO of Delaware Life Marketing, JT Cape, Annuity Intelligence Manager at Aspida, as well as Scott Haggerty, Chief Operating Officer with Prudential Retirement. We're here to discuss product innovation and investment design in the annuity space. It is great to have all of you with us. Welcome to Trade Talks. Colin, let's kick it off with you. When we think about innovation and design within the annuity space, how are changing consumer expectations and advisor behavior helping to shape product innovation and design in the annuity space?
Hmm. So love the question. Um, so the idea of people living longer and the impact of inflation and taxes and the increasing cost of healthcare, all those things that have been around our industry for a long period of time are real. And so the consumer has started to say, I'm probably going to actually use these things for income rather than thinking about the fact that I'm going to use these things for income in the future. And so what it's forced the companies to do is to build product that solve problems like in like a single shell for no matter what version of the issue the client's looking to solve for. So whether it be long-term growth, income now or income soon or income in the future, how can an insurance product or an annuity solve for that in like one singular product? And so, like, I guess the real innovation is, can you put enough features and benefits and value in a product without adding additional complexity to it and ultimately adding real consumer value? So that would, I'd say, be like the core of what's driven the innovation is the client needs and the ultimate use of the value of the product itself.
And JT, from a Aspida's perspective, how are you seeing client demand, advisor behavior reshaping what the annuity space looks like?
Yeah, I completely agree with the first comments. I think really solving problems that client have, not just talking about features, but really looking at the outcomes that the clients want to have. So we talked about, lifetime income, clients are living longer, protecting their assets, growing their assets, or leaving a legacy. These are really things that are important to a client. And then also, as you think about it on the index side specifically as well, having a simple story for an index as to why a client would invest in the potential investments in there. I mean, over the last 5 or 6 years, you've had really strong equity returns, which has really raised the bar for index opportunities within that space. And so, really finding additional ways to get enhanced equity exposure into those indices has been really a challenge and opportunity that advisors and clients are really looking for because with benchmarks earning around 10% or so in fixed index annuities, they're looking for opportunities of what are other complementary ways that they can earn not only that return, but also a higher return in a safe fashion.
Yeah. And JT, you and Colin bring up a great point of not adding complexity to the products. So, JT, how are carriers evolving their investment architecture within annuities to meet the demands of clients and RIAs?
Yeah, absolutely. I mean, when you think about investments, you're really looking at diversification as a key within this factor. And what you see in the fixed index annuity space, especially, is you see a lot of investment in the S&P 500. So really looking for other investments that are going to be complementary to that. Looking at ways for them to be able to create diversified portfolios. So creating, predefined diversified portfolios to help advisors to be able to get that diversification, or also looking at ways you can incentivize non-S&P allocations with it being higher rates or bonus rates that are encouraging their clients to actually do what's in their best interest in the long run, which is create a diversified portfolio that can perform across all different types of environments.
Yeah. And Colin asked the same question of you as well, how you're seeing the investment architecture evolve across the industry.
Well, a conversation like this with Nasdaq, I think, is a really good starting point. The addition of other index companies and other investment companies who have joined the world of solving for these long-term needs that we talked about in the first question, I think does, helps us go a long way in getting these investment stories out to a broader audience. I think it's 93% of advisors, licensed advisors today, don't sell annuities. Said differently, 7% do. So this idea of getting Nasdaq involved and getting things outside of the S&P involved, I think pulled different people into the annuity world, which of course is really interesting for both RILAs and FIAs. One statistic that I think is like, one of these ones you almost can't like get your arms around is if you go back just 4 short years ago, S&P based strategies were around 39% of all FIA sales. Today it's over 65% of those sales. And that drives real commoditization of the products, meaning the products aren't sold on the values, simply they're just sold on the S&P rate. And as JT mentioned, that does a lot of things that harm the long-term impact or long-term value of the product itself. So the short answer is like bringing different investments to bear in an annuity, in particular a fixed index annuity or a RILA, offer different people perspective on saying, hey, I'm very familiar with what NASDAQ does. My clients do need more exposure there, and maybe I can get it inside of here versus someplace else.
Yeah, and this is a perfect time to bring Scott in. So, with the emerging of digital initiatives, AI, data analytics, all these emerging technologies, how is that transforming the way that annuities are sold?
Yeah, it's a great question. I love it. I think overall, when we think about, how we're going to address really the growing gap in the number of people who feel sufficiently prepared for retirement and protected from outliving their savings, we want to reach more advisors. We want to reach more customers. In order to do that, we just have to make things simple. And so you really rely on the digitization of our business. I think that there's been a significant, change across our industry, which is being less tolerant of kind of these paper-based ways of doing things over the years that just create a complex, experience for our customers. And so, one of the things that I like to highlight, I love the stat that was just put out there, right? 93% of advisors are not selling, annuities today in any kind of meaningful rate. One of the reasons for that is because they are complex and they require a significant amount of knowledge. How do we digitize that and change that experience for them? So, I think one of the things that we have done is partnered with associations like IRI, the Insured Retirement Institute, and we've launched an effort called Digital First for Annuities. And it's exactly that. It's getting us to remove friction from every part of the advisor and customer experience, relying on that digital capability going forward to make it easier for them.
Yeah, and this ties in well, Colin, with what you were saying before when you think about the next generation of product development and how that is aligning with modern investor priorities. They're looking for more specialization and personalization.
Yeah, that's for sure. To that prior question, Joe, the world of building products based off of clients' needs has become a reality for our industry. If you want it to be, if the insurance company wants it to be, I mean, of course, I guess in general, people would say they want that to be the case. But because big data allows us to analyze and analyze all these pieces of information and does a really good job at eliminating like the liar's box to tell us really what clients want and really what advisors wants out of products. And this digital initiatives and big data and data analytics helps us build product the right way, which ultimately gives this platform for the next generation of product development that is really honed in on the client's needs, specific clients' needs. Like I'd imagine each one of us would suggest that we have our individual problems. However, they all look very similar to one another. And can you build a product that makes you feel like it's built just for you and just for the thing that you're trying to solve for? And again, that question you just asked does a really nice job at setting up for this idea of the modern investor being solved for with really, really effective product development.
Yeah. And JT, the more that you leverage these emerging technologies, particularly with data analytics, just allows the industry to develop more nuanced and specialized products moving forward too.
Yeah, absolutely. I mean, I think if you look at the annuity industry in general, a lot of what you've seen historically is not as much investment as some of the others in technology. You saw a move with COVID really forcing some of the insurance carriers to start to take digital first steps. And those who have really continued to invest in those spaces are continuing to see advantage. You're seeing new carriers move into the market to be able to bring technology. And that's really pushing some of the legacy carriers to really make those investments so that you can move faster and really address those needs and bring those needs to market because because it does take amount of time to be able to build a product or build an index and be able to put it on the platform. The more efficient that you can do that, the better you can be able to serve your client needs in your organization as well.
Yeah, and it's not a one size fits all solution because structural and operational shifts, you need that to stay competitive as well to differentiate yourself within the industry.
Absolutely. I think, there's this, it's great we have a collective effort towards migrating everything digitally, but customers are demanding more transparency. And so, it's not just about the beginning of understanding what an annuity can do for you. It's taking that through their experience from beginning to end. So we need to be transparent with the way that we think about sharing information with them, using data analytics to actually get them to recommending solutions they might not have considered before, helping to address milestones in their own retirement, right? And how do they make sure that they understand exactly the impact of the decisions that they're making overall? I think there's this, was touched on earlier, this hunger for education. And, once you add in simplicity married with a little bit of technology, right, we can explain things differently than we ever have before. And I think that's a really important part of the way that we enable advisors to service their customers, but customers' understanding of exactly what they're doing.
Yeah, I think that's a great point. We'll wrap this up with JT and Colin. JT, I want to get your thoughts first in terms of the industry and doing that advocacy and outreach, whether it's for investors or for RIAs. That can also be a tool to grow the next gen of RIAs or insurance and annuity professionals as well. So it can be leveraged in a number of ways, these emerging technologies, just besides the product wrapper.
Yeah, absolutely. And I think where you can see your portfolio not just as your single product, but when you see it, how it fits in all of the investments that you have. Certain investments may be more appropriate for a fixed index annuity with downside protection, or a RILA with limited downside protection as well, to where you can really bring that in. But it's really hard to see it when it sits off by itself. But these new technologies are really bringing in where you see a portfolio across all of the client's assets, not just a single product in one view.
Yeah, and Colin, I'll have you wrap it up here for us.
Great, thanks, Jill. So the advisor community says, I want one of three things. Number one is I want to call someone and tell them what to do. Number two, I want to be able to do it myself, whatever the thing is that they want done. Or three, I want to be able to put my client in a position where they can get done what they want to get done. And so here's what I mean by that is like these self-service avenues for advisors to use have become really important. Can they drop it? Can they drop a ticket just like they do with every other investment? Like literally get online and drop a couple pushes of the button and drop an annuity trade. Can that happen? That's a really important initiative going forward. Number two, once it's there, can I solve problems? Because annuity companies, insurance companies tend to cause problems as all that business gets pushed through. This paperless transaction things to get transfers over from one company to another. All that stuff is really evolving fast. And then number three is once it's there, can I view it? Just as JT was suggesting, is can I view it? Can I look at it? Can I make all the changes that I need to make? We as an industry, we as an organization as well, but we as an industry need to do a really good job of making this feel exactly like it feels everywhere else that advisors invest.
All right. Appreciate all of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.